There's been a significant change to the invested position over the last 3 months. We've taken the invested position from about 25% to 40%. The biggest change in the underlying portfolio has been the addition or the increase in our weighting to gaming stocks. We've taken that to about 20% of the portfolio. Remember in the last video we spoke about Doneco and Genting Malaysia. We've added now 2 Macau gaming names in MGM China and SJM. Basically these businesses have derated over the last 6 to 8 months based on the market downgrading assumptions for gross gaming revenues in Macau. So we've added to that theme. We've also added 2 stock-specific investment stories in LG H&H, which is in Korea. They're a cosmetics, beverage and household products business. And we've also added China Yuchai, which is a Chinese engine maker, diesel engine maker, listed in the US. The biggest driver to performance over the past quarter was clearly the moves we saw in the Aussie dollar. The Aussie dollar over the last 3 months has depreciated by that 7% figure. This is something that we highlighted early and when we were going through the roadshow for the listed investment company, we spoke about our views on an inflated Aussie dollar. And based on that view, we offshored a lot of the money and kept our Aussie dollar exposure to a minimum. So that's obviously helped the fund. On the stock side, performance has been mixed. We've had positive contributions from the names like Turquoise Hill, Baidu and Doneco International. A standout over the period was Turquoise Hill. We're seeing some progress in the negotiations between Rio Tinto, Turquoise Hill and the Mongolian government when it comes to their project in Mongolia. And the market's starting to become a little bit more comfortable with phase 2 coming back onto market. And this is really where the value of the Turquoise Hill business and our investment case lies. On the other side, we've obviously had the addition of the Macau gaming names. As I've spoken about before, what we really try and do is take advantage of short-term market moves to build out positions based on our longer-term investment thematics. So we're going to get sometimes caught up in a little bit of the short-term volatility, but that's fine for us because we're really looking at the story over a 3 to 5 year period, and what we see is a significant upside in those names. We obviously had a very volatile kind of end to the recent period, and this is based on a combination of factors. So when you look at the investment markets, particularly in Asia at this point in time, it's a very interesting and interesting proposition for investors. You've obviously got increased concerns around what's happening in China, the ability for the Chinese government to manufacture a gradual slowdown. Data points coming out of China suggest that that's probably becoming more and more difficult. So people are really thinking about how that transpires for stocks, not just in China, but across the region. And secondly, the other big point that people should be focused on is obviously the tightened liquidity environment in the US market and how that affects stocks in the Asia region. Obviously, one of the biggest beneficiaries for the loose monetary policy in the US has been emerging markets. So they're the 2 factors that are playing on the market's mind and I think people need to be aware of. For us, heightened volatility is not something we're afraid of. If you actually look at what we've consistently said since raising this money is we'll be very patient about deploying it. And this volatility and this pullback in markets is excellent for us to actually start to build the portfolio out as we would like. So obviously over the last period we've gone from 25 to 40% invested. We think that gradually increases to a point where it's more in line with our unlisted product. And subsequent to the end of the quarter we've actually added 2 positions in the fund. I think it's really important just to finish off and highlight to investors that one of the most important things to realise is that Asia is just not the China market. You know, there's a lot of stocks out there and there's a lot of opportunity for investors. So think about it from an individual stock position and building a portfolio based on that. That's really how we're looking for it. And we think even in these markets, we can find 15 to 20 ideas to build out a pretty robust portfolio over the next 6 months.